Welcome to Miss Market Uptrend. This week we will have three main issues: the U.S. Federal Reserve, the explosion of the corporate bond debt, and the news about the State Bank of Vietnam. So the first one, according to the minutes of the December meeting of the U.S. Federal Reserve released on Wednesday, January 4th, policymakers will commit to fighting inflation and expect to maintain higher interest rates until more progress is made in the fight against inflation. After the meeting, Fed Chairman Jerome Powell indicated that although some progress has been made in the fight against inflation, he sees only signs of pause and expects interest rates to hold higher, even after stopping the increase. The minutes reflect those views and note too that no members expect a rate cut in 2023 despite market valuations. Markets are currently pricing in the possibility of a 50 to 70 basis point increase in total before pausing to assess the impact of the rate hike on the economy. According to CME Group data, traders expect the central bank to approve 25 basis point increase at its next meeting on February 1st, 2023. The second news is the explosion of the corporate bond debt bomb is the most shocking incident of the Vietnamese financial market in 2022, leading to the collapse of investor confidence. How to revive the bond market will be the hottest story in 2023. After the shock of Tân Hoàng Minh and Vạn Thịnh Phát, the wave of selling off bonds slowed down and market liquidity eased. However, the pressure to mature in the coming time is very large, which means that the corporate bond market in 2023 will continue to be difficult. The amount of corporate bonds maturing in the next 3 years is up to 700,000 billion Vietnam dong, excluding interest. If a failure occurs, the consequence will be very complicated because the connection between banks, securities, real estate is quite large. Currently, banks not only invest in corporate bonds quite large, about 284,000 billion dong, but also lend more than 2.3 million billion dong in real estate. Not to mention real estate accounts for 65% of the corporate assets of the bank. This means that when the real estate and bond market crash, banks cannot avoid the consequences. The bright spot of the market at this time is that the draft amendment to decree has many positive regulations, including a proposal to allow issuers to extend the bond term by 2 years. Some other regulations are also temporarily postponed for 1 year of implementation. This draft, if issued, will help issuers have 2 more years to manage debt reversal, asset sales, and debt restructuring. Accordingly, businesses that are due to pay their bonds in the 2 years of the peak debt from 2023 to 2024 but are facing payment difficulties can negotiate with investors to extend to 2025 to 2026. Although difficulties in the market cannot be immediately solved, the above regulations will help investors reduce anxiety, flee from bonds, and improve market liquidity. However, this is still only a short-term solution to liquidity problems. In order for the market to grow strongly again, more solutions are still needed to solve the problem and regain investor confidence. And the last news is the news about the State Bank of Vietnam, which has been in a state of liquidity support for the banking system in the first 3 days of the new year. Accordingly, this agency has net injected a total of more than 24.100 billion dong in the past 3 days, mainly through the channel of mature bills. On the other hand, the operator continues to lend to banks for additional liquidity through the channel of pledging valuable papers with a scale similar to that of major loans. The above signals show that the orientation of State Bank to support system liquidity in the context that the peak payment period during the Lunar New Year is approaching and interbank interest rates have increased sharply in the recent days. Vietnam's first unicorn is listed on the floor, where technology stocks were waves. This is another news. VNG's listing on the stock exchange is a good signal for the market in general and technology stocks in particular when there are more quality goods for investors to choose from. However, it is hard to expect a really big technology wave. Usually, a new rookie listing on a large scale is expected to have a positive effect on other stocks in the same industry group due to investor regulation. However, with the characteristics of the technology group and the current market context, it is not easy for VNG's listing to create a real industry wave. Valuation is not cheap, while profits are difficult to break through. One of the biggest barriers that makes it difficult for technology stocks in Vietnam's stock market to break through is the not so cheap valuation of leading companies in the industry. FPT is trading at a PE of about 17x, while CMG has a PE of nearly 220x. These figures are all much higher than the PE of about 11 times of a VN index. Basically, technology stocks often have a higher valuation than the market average thanks to high barriers to entry, the expectation of sudden profit growth, and partly due to the attractiveness to investor foreign investment. In fact, only FPT is the only technology stock that regularly closes foreign room. However, with a stable but not overwhelming growth of about 20 to 30% per year, it is difficult to expect the market to accept a high valuation of up to 2x for FPT right now. And that's the end of our news this week. Thank you for listening.